Unfortunately, for some reason, that my Mac, whenever I record on OBS, it is unable to pick up any sort of data along the lines of, my extensive webinars. So apparently, every time I'm recording on my Mac from OBS, essentially during my weekly webinars, they get corrupted. So therefore, I just wanted to make this study to really make up for, the past two webinars being not recorded as far as my technical difficulties on my end. I essentially probably need to upgrade my hardware that I'm recording off of. Therefore, let's get into this case study of basically what I went over in the said webinar that I recorded this morning. So, we started off on gold. Let's make this a little clear for you guys. All right. So, when we analyze gold, we mentioned in the chat that we induce sellers here. So since we induce sellers, we are looking at the market from the lens of we just trap buyers, inducing sellers. We had a BOS to the downside. Therefore, we do not want to be selling from the certain areas above. So now let's get into this price action. Perfect. So a lot of people have the same questions as far as, how do you find a bias? They still say things like, oh, I understand the concepts as a whole, but I still can't piece together how you guys are finding biases or direction in the market. Well, guys, the way you find a direction in the market is the inducement model. So we look at the market from the lens of the inducement model. Who's being induced into the market? Buyers, sellers. Is it an inducement high model? Is it an inducement low model? So these are the things that we have to really, we have to ask ourselves these questions during the market session that we're trading, whenever we're analyzing price. So let's get into this price action. We trade above these highs. So therefore we induce buyers. Since we induce buyers, there is no bias here right now at the moment because we just took a high. Just because we took a high doesn't mean we want to take a sell. But we need to see a build-up form in this market. Therefore, we see a build-up form whenever we react from this level. So we have a liquidity block here, yes. Since we have a liquidity block here, we can expect a reaction off of this area. Doesn't mean we want to essentially be trading from this area, no. That's because we have no context. We have no liquidity in the market to target. So why take this short if we have nothing to target? So therefore, we expect a reaction off of this area. Therefore, let's drag this area out. Look at this price action that we get to the that's trickling to the upside. BOS up, BOS up. Cool. We know we have liquidity below here. We know we do not want to be buying in this area. So we can clearly see that if we have it from this area, price reacted off of this, traded higher, basically inducing buyers. We also have another indication of inducing buyers as well when we take out this internal high. So since we took out that internal high, we know we have a build up here. Therefore, buyers are buying this. We do not want to be buying with retail. Buyers get trapped, sellers get induced. Now, okay, we have a framework now to work with. So this is how you wait for conditions to form in the market pertaining to our system. Therefore, we induce sellers. We trap early buyers being retail concepts, breaker structure, buying with breaker structure, order block, whatever the case may be. So early buyers get trapped. And what did we do? We reacted off of that liquidity block area to generate liquidity in the market. Now we have engineered liquidity into this market. Now, what do you know? We have a buy target that's formed. So now we have our bias here. We have our framework to work with. Okay, so you need to see a build-up form, and when we say you need to see a build-up form, think of it in the lens like how I just explained this. We need to see the market react from an area, like how we did here, induce buyers, creating some sort of buildup here, trap that buildup, or, essentially trapping buyers, trapping sellers, whatever the case may be. Now we have engineered liquidity in the market. Therefore, this is where we find, our most probable conditions. So if we look at this price action here, we can dissect it. So we don't really get much in the form of an entry. We just take out this high. We have a liquidity block to the low. Not any sort of entry that I would have taken. Nothing gives me sort of any conviction here to really be interested in taking anything here. But what we do is we leave an inducement low here. So we leave an inducement low. Cool. I'm marking this out as my inducement low because this is the low here, right? That took out the high, that induced buyers here. So let me make sure I'm still recording. Okay, cool. We're good. All right. So, like how we said, we need to build a framework again. We need to see a build-up form in the market. We need to see traders getting induced into this market to generate liquidity because our whole strategy is based on liquidity. I get a lot of DMs of people saying, are we not, accounting for the trend? What do you mean the trend? I don't get what you mean by the trend. We're focused on the one thing, liquidity in the market. That's all that we're focused on. That's how we build our bias. We look at the market from the lens of the inducement model. Remember, traders being induced into the market. We know retail wants to be selling from this area. So since we know that, we do not want to be selling from this area. Regardless of the fact that we have an inducement low, we do not want to be taking counter bias sells just because we want to see price towards the low. It's low probable. We've taken out our sell target here. Therefore, there's no reason we should be taking any sort of sells. No reason. Unless you want to put that, high risk on your portfolio, on your account. Up to you. Totally up to you. I'm not going to tell you how to trade. I'm just going to advise you, how to stand clear of certain conditions. So what we do is we trade into this POI. We induce sellers. Oh, gosh. Okay, we induce sellers. Trapped them. Trapped them at the highs. Trade into these areas, into this low. Look at how we trade into this low. This is why I wasn't too keen on looking for buys in this area. I hate how it's not respecting. Okay. So this whole area, I just grabbed this whole area. Cool. So we tap into it. We don't do anything of the sort. We induce buyers. So we did not get to the inducement low that I wanted. And this whole area was a liquidity block here. I was just going to take a direct entry off of this area, targeting this high, but we didn't get that. So that's okay. The market is not going to always do what we needed to do. It's not going to always go to our entry point. The market is going to be uncertain, but we have to be okay with that. That's why we mark out these levels so we can stand clear of lower probability trades. So the market ends up running for that target that we had set out, that engineered liquidity high. Look at that. So just because we didn't get an entry doesn't mean that, we can't be on the right side of direction still. We can still find a way to frame out direction even if we didn't get a valid entry from it. So buy target is taken. Now we have no bias. No longer have any bias. Why? Because there is no liquidity yet in the market for us to be trading from. So let's clear that up. Sellers trapped. Buyers have been induced into the market. Oh, well, wrong diagram. Sorry. Sellers trapped. Okay. So just like how we did here, we have a liquidity block area here that we could potentially react off of. Let's go on to 15. We have a liquidity block area that we can potentially react off of. Not saying that we're going to be selling from this area. As far as taking any sells, you can, very high risk, because one, we're at the extreme. Two, we didn't have any sort of build up yet at the moment. So me personally, I'm not taking any direct entries when this high is taken. I'm just going to wait for further price action to develop. So let's see what we get. So we have taken out a low, and then we come for these inducement highs here. That induces buyers into the market. Buyers get trapped. But we have a liquidity block. So, as I mentioned, and as I mentioned in the webinar, this price action was a little bit difficult to navigate here because there was two valid entries, yes. So you could have got involved in the long, you could have got involved in the short. I mentioned that you could have taken a direct entry short here. Very high risk in my opinion because one, where is the liquidity that I would be targeting? I'm anticipating to the fact that the price would run to this low. Why this low? The fact that price induced higher from there. So I would expect that we would react from this area as it being a trap, build liquidity, and take it out. So therefore, I would be targeting that area if I was to take a direct entry short. Remember, high risk, lower probability, but at the same time, it's on the premise of we're taking out this trap area. But then again, if that all depends on my portfolio, what my drawdown is looking like. If I have the risk appetite to take it, it depends. To each their own. I don't recommend it because, these are the trades that have the lower strike rate. But in any case, you're in at the extreme. So it's a valid position, but at the same time, very, very hard to play. So let's get into this price action because we had a trade there that day. I know me, Marco, and Adam took this trade on gold. So what we have here is this price action is a little bit tricky. So we do have a liquidity block here. Let's keep a note of that. Do have a liquidity block here, and we have a build up. Notice how we taking this high. Price respects this area, and then moves away again. So we move away again after respecting this area. So that induces buyers. So therefore, we have liquidity below. Sorry. You have a potential direct entry here. Potential direct entry there. I didn't take the direct entry as I didn't have an alert at the inducement low, and I was busy at the time doing something. So, therefore, your manage point should be the inducement high, always the structural high. Not really a 3-to-1, but it's fine. Still would be your manage point in my opinion, just because of the fact that price could reverse when it touches the inducement high, and it does. But at the same time, here's what we get. So I was able to take a confirmation entry in this price action. So I was confident enough to wait for this to form. So when we take out buyers here, we trap buyers, early buyers here, by taking out this inducement low. We induce sellers. So what we have here is inducement high. I'm just waiting for the same thing to happen. Buyers get induced, trapped while we hold the high. Just to indicate that I can get involved into the entry, it being more higher probable since we hold the high. We induce higher, we trap lower. As soon as we trap lower, I take the entry. Covering that LB right there, targeting this high. Like I said, manage point at the inducement high. I honestly should have took my whole trade off here just because it's a 1-3. It's a valid trade, especially on futures. I really don't need to be shooting for the stars and these type of conditions when we're at the extreme. So what happens, what price does is price ends up taking this area to the left. Funny. And I also mentioned in a couple of a couple of my answers to people's questions in the Discord, notice how we react from the inducement high, right? We react from the inducement high, and what does that do? It builds liquidity. It builds liquidity with this reaction by inducing sellers. So you notice how that reaction induced sellers for us to take our entry. So price runs all the way to the inducement high. And what do you know what we have here? An LB. Hard entry to take. I am not going to lie. I didn't get involved in this entry. I was involved in the long. Therefore, I was taking out break even when this move happened. But just showing you the validity of this. The fact that this entry is the one that you would, it's more probable to take this entry over the direct entry from the left. So you take that to the lows, because now once the inducement high is taken, we induce buyers and we trap sellers. So once we do that, we have liquidity at the lows now. Now this area is on the cards to be taken, because yes, we've taken the inducement low. Now we respect that LB here. Since we respect that LB, what do? We generate liquidity in the market once buyers get induced. Therefore, entry here, remember LB there. This price action was, I didn't really care to look at this price action. This is around market close timing, but notice how that inducement high gets traded above and price dies off after. So inducement high gets taken, that induces buyers again into the market, early buyers, after respecting this area. Target met. So it would be an insane target if you also held to these lows on CFDs, but let's be realistic now. Who's holding to that? I'm taking my money here. So let's get into some further price action. Notice how we react from these areas. Well, we don't really react from these areas. We just induce higher. How can I okay. We basically just take these highs and trade away. Price dies. Let's get into some more price action. Okay, let me do this. I'm going to drop this part, and then I'm going to go over this next piece of price action for part 2. Give me 1 second.